Greetings, members, one and all of the Salivation Nation. The bottom for gold and silver until... Let's explore! I'm not going to even tell you that you should press that thumbs up button to start this video out. I'm not going to even suggest it. But what I will suggest is that the bottom for gold and silver may not be here yet. However, today's roundup of the news suggests that gold and silver may be awakening slightly from the expected FOMC statement that was made. We're going to talk about this. Referencing an article here from Kitco News, Jim Wyckoff talks about gold and silver erasing some of the losses after the expected FOMC statement. Gold and silver prices are moderately lower in early afternoon U.S. trading Wednesday, but they were up from lower levels seen earlier today and just before the afternoon's FOMC statement that saw an expected hawkish Fed leaning, but no big surprises. February gold did hit a 2-month low and immediate volatility after the FOMC statement, while March silver hit a 17-month low. February gold was last down $7.70 at $1,764.50, and the March COMEX silver was last down about almost 2 cents at $21.71. The just concluded U.S. Federal Reserve FOMC meeting statement said that 3 interest rate increases are likely in 2022. Remember, they were originally stated that we'd be lucky to see 1 at the end of 2022. But they said that U.S. inflation is rising, but implied it will back off in the coming months. Now, to me, that's almost leaning back towards retracing the inflation is transitory realm there. They think it's going to back off. In other words, they think it's going to be around, but it won't be as intense. The FOMC statement said that the Fed is accelerating its asset purchases, tapering, which was expected. The statement also said that the Fed officials remain concerned about the coronavirus and its impact on the global economy. Traders now await the press conference from Federal Chairman Jerome Powell. All of the major central banks hold monetary policy meetings yet this week, so we're not quite absorbing all the information from around the world as these meetings take place, the last of the year. Global stock markets were mixed in overnight trading. U.S. stock indexes are lower as the afternoon is pressed on here. There's a stark assessment of the COVID virus, resulting supply chain disruptions heading into the new year. Broker SP Angel, in an email dispatch today, warned that we expect the highly transmittable Omicron virus to significantly disrupt supply chains through the first quarter of next year. Each new dominant variant passes faster and more effectively than the last by the very definition, with Omicron as the latest and most complex variant to take over. It may prove to be a milder and less deadly virus. It is still making people sick and still takes time to recover. We expect ongoing mine disruption to further hit metals production, exacerbating supply-demand deficits and lowering already low LME and SHFE warehouse stock levels. And other major industries may suffer the same fate in the coming months. We know that it's very difficult to gauge these supply chain issues and the impact it's going to have on metals prices. Copper has far outperformed silver this year, and 2022 is going to be quite an interesting year as we start to assess these supply chain issues. And again, understanding how its effect on the marketplace, that is the realm of discussion that we should be having in relation to perception of the variant and the virus and the like, not necessarily what people's opinions are on it. the market reaction is something that can be observed no matter what your opinion on any given subject of any topic that can be politicized or what have you. Since this thing started back in 2020, well, we've seen it creep into the news. We weren't sure exactly what to make of it during that time. So all we had to go on is just what we were told and the severity of it and how the markets reacted to it. But more and more as we pressed on in that year, we certainly did see it have a greater impact on the markets. And that is something that is continuing today, obviously. But we will continue to press on. We'll see how the metals react, because the bottom is either here or close by. And then from the bottom, there's only one way to go, and that's up. And I believe that we're going to probably see that for gold and silver, at least at some level in 2022. What that level will be, I'm not sure. Will I make a prediction for 2022? Likely, but more likely I'll probably be a bit more tepid. I like to have thought that my predictions for 2021 were somewhat realistic. Turns out they weren't realistic at all, at least as of the exact middle of the month of this year, or in December 2021, which is about 15 more days to go before the year's end. A lot could happen between now and then. I'm not holding out, or I'm not dismissing the possibility that my predictions could come true, but it's less and less likely. But really, it doesn't matter in the end. It's about what these metals do for us over the course of a long period of time. How you buy them is more important than ever in terms of preserving your wealth, especially in the age of high premiums and volatility with the price movement and where we're at. So in other words, you make a purchase of silver at a low price today. If you get silver at a low price with a relatively low premium, there is a much larger chance that you're going to preserve your wealth than if you were to buy all of your silver in 2011 when it was nearing $50 an ounce and you're paying $52 for a silver eagle. Huge difference there. But I digress. So getting a little bit about talking about oil prices. NYMEX crude oil prices were lower and trading around $70.50 a barrel. The U.S. dollar index is higher and added to earlier gains after the FOMC statement. Meanwhile, the yield on the U.S. Treasury 10-year note is presently fetching 1.46%, up just a bit after the Fed statement. All of those things, oil, the dollar index, and the U.S. Treasury 10-year note bond rates, those things have an effect on the prices. And so we'll see how this play out. Let's take a look at what happens with some of these futures. The gold future bulls have lost their slight overall near-term technical advantage as trading turns choppy and sideways. Bulls' next upside price objective is to produce a close above solid resistance at $1,800. Seems so far away now these days for gold. Bears' near-term downside price objective is pushing futures prices below solid technical support at the September low of $1,723.70. First resistance is seen at today's high of $1,774.30 and then at $1,785. First support is seen at today's low of $1,753 and then at $1,750. March silver future prices hit another 9-week low today. The silver bears have the overall solid near-term technical advantage. Prices are in a 4-week-old downtrend on the daily bar chart. Silver's bulls' next upside price objective is closing prices above solid technical resistance at $23 an ounce. The next downside price objective for the bears is closing prices below solid support at $21, a $2 difference. First resistance is seen in the middle at $22, and then at this week's high of $22.43. Next support is seen at today's low of $21.41, and then at $21.25. As we record this video right now, the markets are about to close, and we see silver and the ask price at $22.16, and gold is at $17.78 and 80 cents, up slightly from where they were. So we may be seeing the lows of the year for silver today. I don't know. Anything could happen tomorrow. We'll certainly keep abreast of the situation and see where things go. But it is quite an interesting world we live in with the markets the way they are, and we will keep track of it and follow it into next year. That's what happens on this channel and others too, but there you have it. So I hope you enjoyed this video. If you like it, I hope you stick around and maybe check out some other videos. You know what I mean? It would be fine. It would be cool if you were to hang out with us more often. I would like that very much. So I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.